Hey, this is Mike. Should you trade international stocks? International stocks can actually provide you with market-beating returns. However, there is increased risk. International stocks can be based in less stable countries and subject to geopolitical, currency, or corruption issues. Also, international stocks have less accountability than the U.S. They're not really subject to sort of the filing laws that we have in U.S.-based stocks. So there is a lot more corruption, especially a lot of Chinese stocks are subject to a lot of corruption. A lot of people have gotten burned by those. And obviously, if you look at countries like Russia, it's very, very hard where a lot of those companies are tied in with the government to know if their numbers are good or if they're not good. So one of the things that you want to do is look at international-based ETFs. You can buy ETF-based stock on any country, Japan. You can use actually all of Asia can be one ETF minus Japan because Japan is the second largest economy in the world. You can also use a China ETF, a Russia ETF, a Germany ETF, a UK ETF. These ETFs are really much better for you as opposed to going for individual international stocks because a lot of those stocks is really just a crapshoot whether or not you're dealing with a company that's legitimate. Unless that company does a lot of business in the United States, you do have a chance of finding a company, an international-based company that's a little more stable. So for instance, InBev, which owns Budweiser, or Daimler AG, who sells a lot of Mercedes. Mercedes is like the biggest market for the U.S. The U.S. is the biggest market for Mercedes outside of Germany. So a lot of international stocks are kind of hard to gauge, but if you find an international stock that does a lot of business with the United States, you're more likely to deal with someone who's stable. Now, obviously, that's not always true. You look at Volkswagen when they had the diesel scandal. That really hurt the stock pretty poorly. But that's a scandal that could have happened in any country. That could have been a US-based country that had that scandal. However, an international company that does a lot of business in the US is going to be a lot more reliable than an international company that doesn't do business in the United States. So, if you do want to invest in international individual stocks, the best thing you should do is look at countries that have very low corruption. So countries like the Scandinavian countries have very low corruption. Canada, Australia. There's actually an index of the most and least corrupt countries. You can look up at that index, and if the individual international stock you want to invest in is in one of the top 10 or 15 countries, that's probably a stock you can further research and consider as a buy. So international stocks can help you beat the market, but they're a little tougher to gauge because they're subject to less filing and regulation than US-based stocks. However, looking at international indexes, ETFs by country, that can help you spread out the risk, and also individual international stocks that do a lot of business in the United States that could also give you less risk than the typical international individual stock. So, okay, I hope this video was helpful. If it was, please be sure to like, share, and subscribe. Thank you. Bye.